Welcome back to Explain the Charts, everyone. Today, September 12th, 2025, we're doing a deep dive into one of the market's titans, Microsoft, ticker symbol Microsoft. The tech giant is making significant headlines, and its chart data is telling a fascinating and dynamic story that we will unpack. Let's first look at the recent news that's been driving sentiment, and then we'll jump straight into the candlesticks across multiple timeframes to see the price action. As of today, Microsoft is trading robustly around $510.82, showing a healthy intraday gain of nearly 2%. This positive momentum isn't just arbitrary, it's strongly underpinned by some truly significant fundamental developments. Microsoft recently settled a long-standing EU antitrust case by agreeing to unbundle its Teams service from its Office suite, effectively removing a major regulatory overhang and the threat of hefty fines. This resolution is overwhelmingly bullish, as it clears a path for Microsoft to focus on core innovation and expansion without the lingering shadow of legal battles. Even more impactful, Microsoft and OpenAI have forged a new arrangement that could potentially lead to a Microsoft buyout of OpenAI in the future. This strengthens Microsoft's already formidable position at the forefront of the artificial intelligence revolution, a sector showing immense growth and investor appetite. The success of peer companies like Adobe, which recently surpassed its own AI revenue targets, further validates the strong performance potential within this burgeoning artificial intelligence sector. The broader market is also experiencing a tailwind, with rising hopes for Federal Reserve interest rate cuts buoying investor confidence. This creates a generally favorable risk-on environment that typically favors large-cap growth stocks like Microsoft. Now, let's turn our attention to the daily chart for Microsoft to understand the broader trends and how these significant news events have impacted the price action over the past year. Looking at the daily candles from April 2024 to present, we can observe a clear overarching uptrend, albeit with several notable periods of volatility and healthy pullbacks. Notice how the stock initially started around $400 in April 2024, gradually climbing with subsequent minor corrections. However, a particularly striking candle appears on April 9, 2025, where Microsoft surged by an incredible 10.45% in a single day. The price opened at $353.53 and closed strong at $390.49, demonstrating immense buying pressure. This explosive move directly correlates with the breakthrough news we just discussed regarding the EU antitrust settlement and the strengthened OpenAI partnership, acting as a powerful catalyst for the rally. Following this, Microsoft continued its impressive ascent, reaching a new 52-week high of $555.45 on July 31, 2025. This significant milestone showcased the market's robust belief in Microsoft's long-term growth prospects, particularly fueled by its AI initiatives. However, since that July peak, we've observed a notable pullback, with the stock retracing a portion of its substantial gains, which is a natural part of market cycles. Throughout this period, the price has repeatedly found substantial long-term support in the $390 to $400 range, indicating a strong floor where buyers consistently step in to defend the price. More recently, the $450 to $460 zone, which previously acted as a strong resistance level, could now potentially serve as a crucial support should the current downward pressure intensify. The $555.45 all-time high now stands as a significant long-term resistance level that bulls will need to conquer with conviction for any further sustained upside movement. Conversely, a break below the $450 to $460 range would make the $390 to $400 zone the next major target for bears. The current consolidation around the $500 level on the daily chart suggests a battle between buyers and sellers after the recent pullback. The volume on the major upward and downward moves also tells a story of conviction behind these price swings. Let's zoom into the 1-hour chart to get a clearer, more granular picture of MSFT's very recent price action, specifically focusing on the period from late August to early September 2025. Here, we can see the stock trading predominantly in a sideways consolidation within the $500 to $508 range during late August. However, a distinct and sharp shift occurred on September 5th, where we observed a significant bearish move that broke this pattern. The price broke down from its consolidation, falling swiftly from around $505 to approximately $495 within a few hours. This demonstrated a clear short-term reversal from the earlier stability, indicating a notable increase in selling pressure and a shift in hourly sentiment. The sustained bearish candles on this day suggest that sellers were firmly in control, decisively pushing the price through immediate hourly support levels. This breakdown highlights the inherent volatility even in fundamentally strong stocks and the critical importance of monitoring shorter timeframes for such rapid shifts in market sentiment. This acute selling pressure likely stemmed from broader market profit-taking following its rapid ascent, or perhaps a temporary loss of short-term momentum. Observing the breakdown of the $500 psychological level on this timeframe is a bearish signal that warrants attention for short-term traders. The swiftness of the move underscores how quickly market sentiment can turn in the absence of fresh bullish catalysts. Now, let's narrow our focus even further to the 15-minute chart, specifically highlighting the key period on September 11th to get a precise look at the immediate lead-up to today's market opening. We can observe significant short-term volatility and a critical bullish reversal that directly aligns with the stock's current market price. Earlier in the day, the price was consolidating around the $500 to $501 mark, showing relative calm. However, a powerful surge began around 21:23 Universal Time coordinated on September 11th, marking a dramatic change in momentum. In a relatively short period, Microsoft rocketed from roughly $501 all the way up to approximately $511, representing a nearly 2% jump within just a couple of hours. This strong upward movement continued, even touching $514 before experiencing a slight, expected pullback. This intense buying activity created a series of large, bullish candles, clearly indicating a significant influx of capital and a rapid renewal of investor confidence. The current trading price of $510.825, as per our Google search data, is a direct result of this decisive late-day rally. This rally strongly suggests that the positive news surrounding OpenAI and the general market optimism has been quickly priced in, fueling robust short-term bullish momentum. For short-term traders, identifying such sharp reversals on lower timeframes is absolutely crucial for pinpointing optimal entry points during periods of renewed strength and upward trajectory. The strong volume accompanying this surge reinforces the conviction behind the buyers, indicating that this wasn't just a fleeting move. Watching how the price reacts to the $510 to $512 zone in the next few hours will be critical for day traders. So, what are the key takeaways for Microsoft moving forward? Let's recap the important price levels and discuss compelling reasons for being bullish or bearish. For the bulls, the narrative is exceptionally strong. Microsoft is executing brilliantly on its AI strategy, with the OpenAI partnership providing a substantial competitive edge and immense future potential. The recent resolution of the EU antitrust case removes a major regulatory headwind, allowing the company to innovate and expand without significant distractions or financial penalties. Broader market sentiment for potential Federal Reserve rate cuts further supports a risk-on environment, which historically favors robust growth stocks like Microsoft. Technically, the decisive bounce from the recent lows, as prominently seen on the 15-minute chart, suggests that the $500 psychological level could be holding firm as a new, important short-term support. In the long term, Microsoft's diversified business model, consistently robust cloud services, and strong financial health continue to make it a highly compelling investment proposition for sustained growth. However, the bears also have valid points to consider. Microsoft has experienced a truly significant rally to its 52-week high of $555.45, making it potentially overextended in the very short term. The noticeable pullback observed throughout August and early September clearly indicates that profit-taking is occurring, and some investors may be waiting for a deeper, healthier correction before re-entering. Furthermore, broader macroeconomic uncertainties, even amidst the hopes of rate cuts, could unexpectedly lead to further volatility or a more significant market downturn, impacting all stocks, including Microsoft. If the $500 level fails to hold as strong support after the recent bounce, we could realistically see a retest of the $450 to $460 area. A more severe downturn could even bring the price back down to the stronger, long-term support zone at $390 to $400, which has proven resilient in the past. Sustained selling pressure with increasing volume below key short-term moving averages would reinforce a bearish outlook. Conversely, strong buying volume on dips indicates underlying demand. Therefore, managing risk and understanding these critical price points is paramount. In summary, important price levels to closely watch are the immediate support around $500, the prior resistance now acting as potential support in the $450 to $460 range, and the critical long-term support at $390 to $400. On the upside, the 52-week high of $555.45 remains the paramount resistance level to overcome, representing a significant challenge for bulls. An unbiased prediction, a sustained break and close above $515, reinforced by strong trading volume, would significantly increase the likelihood of Microsoft challenging its all-time high of $555.45 within the next few months, perhaps with a 70% probability given the strong fundamental tailwinds. Conversely, a clear break and close below $500, especially if accompanied by increasing selling volume, would likely lead to a retest of the $450 to $460 support zone, with about a 60% probability if such a breakdown occurs. Traders should closely monitor further news developments regarding the OpenAI integration, any major product announcements from Microsoft, and certainly any new statements from the Federal Reserve about interest rates, as these can drastically shift market sentiment. For long-term investors, strategic dips towards major identified support levels, especially the historically strong $390 to $400 range, could present attractive buying opportunities for accumulating shares. Short-term traders should meticulously use the 15-minute and 1-hour charts to identify precise intraday support and resistance levels, such as the recent $495 low from September 5th, for tactical entries and exits. Remember, staying informed and adapting your strategy to new information and price action is key to navigating the markets. Thank you for joining Explain the Charts today for this comprehensive analysis of Microsoft. Don't forget to like this video, subscribe to our channel, and hit that notification bell for more in-depth market insights and timely updates. We value your engagement and look forward to seeing you in the next video. Trade wisely, everyone.